Wall Street had its worst day of the year after President Trump refused to rule out the US economy going into recession as a result of his aggressive trade policies. International markets, including the NZX, were also down, and economists say investors need to buckle up for a turbulent time ahead. Grace Thomas reports.
Financial markets don't like uncertainty, and President Trump's tariff war is bringing it in spades.
The issue today for the market is worries about the economy, and particularly how much damage President Donald Trump appears to be willing to sustain on the economy because of tariffs.
The market pain increased after the president was asked over the weekend whether he was expecting a recession in 2025.
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time.
Following that interview, the S&P 500 fell by 3.2%, its sharpest drop since 2022. The Dow Jones Industrial Average was down 1,042 points, and the Nasdaq Composite dropped 4.6%.
So whether or not the tariffs wind up being as big as people expect, the fear of them and the uncertainty about them could cause plenty of damage on their own. And that's what Wall Street is telling us today, is that they're worried that people and businesses will just spend way less money and feel less confident to buy new things, to make new investments.
The downturn is hurting the president's friends too. Tesla's stock has lost what some have described as the Trump bump, where its market share price peaked at $479 a month after Trump became president. It's now trading well below where it was before the election. Elon Musk himself just about lost for words.
How are you running your other businesses?
With great difficulty. Yeah.
Those deep sighs heard abroad too. Most European indexes also fell, while results were mixed in Asia.
We've also seen international markets, as they've started to open in the likes of Australia and Japan, falling significantly. So it does really reflect the extent of the sort of global worries that are out there at the moment.
Here in Aotearoa, the NZX opened lower today and closed at 1% down. The message from the experts: get used to it.
So with the uncertainty that's out there, one of the keys for me is, look, this could be an event that lasts 1 week in terms of weakness in the market. It could well be an event that lasts for 12 months or so. It's a big unknown at the moment, but certainly that volatility and uncertainty hanging over the market does suggest there's going to be plenty more ups and downs over the next few weeks, I think.
KiwiSaver investors checking their balance today may have also had a nasty surprise, another result of the president's tariffs. But Simplicity's Sam Stubbs says it's important to remember KiwiSaver is a long-term game.
You cannot allow your emotions to drive your investment decisions. You've got to almost ignore what is going on right now, as long as you have a long-term plan and stick to it. Donald Trump's not the only president who's split the financial markets, right? He just happens to be doing it right now, and it feels very real. But over the long term, he's only going to be there for a certain amount of time. Over the long term, the financial markets go up.
His advice for Kiwis is to keep calm and keep saving.